Hello, Sage here for Kalkine. Thank you for joining us yet again. Please stay tuned for our next educational news topic. Goods and Services Tax, or GST. Goods and Services Tax is a tax that customers must pay upon the consumption of goods and services like clothes, food, everyday items, etc. It is an indirect tax that is levied on businesses providing these goods and services, but is paid by the customers. An indirect tax is a tax that is levied on one party, but the burden of the tax ultimately falls on another party. Businesses include the GST amount into the price of the product they're selling. Thus, the GST amount is paid by the consumers as it is passed down to them by the manufacturers. So what are the advantages of GST? Avoiding double taxation. GST helps avoid the cascading effects of taxes, which refers to the multiple levels of taxation that a good might go through. With GST, goods can be taxed once and for all. Choice for small businesses. Small businesses have an option on whether to opt for GST or not. This gives them more leverage in conducting businesses, and the tax burden on them is reduced. Less deadweight loss. Most taxes add less revenue to the government than the amount of money they pull out of the system. However, under the GST reform, which was modelled on the VAT or VAT system, taxation is done on spending rather than income. Thus, it is less inefficient and less distortionary. Reduced state taxes. This was the main intent which led to the adoption of GST in Australia. GST allows the eradication of various state-level charges, the burden of which fell on the sellers. It also reduces tax avoidance, which occurs in the cash economy. Thank you for joining us. Hopefully you've enjoyed our broadcast. Sage here reporting for Kalkine.